And thank you everyone for hopping on Tuesday night. Tuesday night is for traders. Tuesday night is for people that want to really hone in on these skill sets. And we're fortunate that we have the opportunity to source some phenomenal foreign exchange traders. And tonight we have a very special guest, someone who is close to me and someone who I am grateful to call now a future roommate. He's moving down to Miami. This is someone who for the last year, for the last 12 months, this man has, with his, the girl of his dreams, him and her together have literally traveled from state to state, just living in place to place where they were just trading for a living, just trading and traveling and just growing their lives. So they have an incredible story from where they started in a farm town outside of Illinois. I mean, like a farm town, like they started in a small area, but they had big dreams and a big mindset to get out of the area that they were and to be able to travel the last 12 months and to now be an iMarkets Live TV educator and a swipe trades master, providing signals for over 25,000 people. It's incredible, brother. Like your growth has inspired me, man. And I'm just grateful to have you here. So brother, everyone on this call tonight, straight up, man, everyone on this call tonight, like they want to learn how to catch pips. They want to learn how to maximize their profits, bro. That's literally, if they're on this call tonight, they are here to learn how to make money. Can you please show these people how to make the type of money that you've been able to make as a trader, how to build this type of wealth that you've been able to build as a trader, brother? You have had some incredible results, man. And if you could just teach these people how to just maximize profits, minimize risk, and take over their lives just like you and Sam have, it would be an incredible blessing, brother. So with that, I want to give it up to you, man. Please, I know you got IML TV coming up in an hour, but we'll respect your time, brother. Dive in and please give us the value that you can.
All right, let's get it. Yo, Matt, thank you so much for that, bro, and I cannot wait to get down there to Miami. I'm ready. I'm sick and tired of Illinois already. So we ready.
Hey, brother, it's a little quiet on your end. Can you get the volume up there?
I'm quiet, or you want me?
There we go. Let's go. Perfect, brother. Perfect.
It's better. All right, sounds good. All right, yo, so let's get it started then. So I'm going to share my screen. We'll get right into it. If you guys have probably seen on I don't like to go into our story too much because you can probably see that on IML TV every single night. So I want to dig in right to the charts and show you guys what I've been working on. These are a few new things that me and Sam have really been diving into throughout our back testing and throughout what we've been working on as, we try to improve as traders. One thing that I found out is once you figure out a trading style, so something that we talk to students and people that we're teaching constantly throughout the day. And, we're always getting feedback. And the one thing I hear over and over and over again is how simple our strategy is. And it's one of those things that we could add a lot of crazy, wild things to our strategy. But at the end of the day, we have a simple strategy that works consistently, and now me and Sam on a nightly basis are just working on how to perfect that. So I want to touch on a few things that I haven't really I'm just starting to do myself that can help you guys out as well. So the first thing is having multiple hang on, this just popped up in my way. Let me move Matt's face over. All right, there we go. So having multiple our list right here. So you can see I have a different set list for my back testing pairs. Now, if you guys see, it's the same exact pairs, but what I did is I used these with different brokers. So these are all with Owanda, and then this is where I can leave my back testing and I can leave my trade setup. So a few other things, if you guys haven't been on our room, really we just started talking about it this week and maybe a little bit of last week, is we started to talk about really focusing in on what time of the day you are trading. So if you guys can put in the chat box, have any of you guys on this call seen my back testing video that I put out there to show you guys how to find exactly what times your pairs should be moving? Have you guys been able to check that out yet? Or is that something new to people on here? Could you guys kind of give me a little feedback in the chat? Because I don't want to go too into this if all you guys have seen the recording. Not yet. All right, perfect. So there's a few. Yeah, perfect. All right, yeah. So All right, lit. So I have a full training video, which I'll send over to Green later, and it's on my YouTube, so you guys can check it out. And it's like a 37-minute video that goes into a deep dive on when markets are going to be moving. But so just kind of an overview of what this is and how it works is right here. This is a sessions tool. Essentially, it just tells you what session it is. You can come in here, click the settings gear, and you can choose what session you want to trade. So if you guys don't know about my trading style, I'm very, very precise with what time I'm trading, because the Forex market is a 24-hour-a-day market, 5 days a week, but the currencies don't move like that. They only move during the sessions that they're being traded. So if you guys can see right here, I'm a London sessions trader, so this is London sessions highlighted. I'll be honest, guys, I don't use any of these indicators. You can see all these drop downs. I have a ton of different indicators that people have told me about. I've tested, I've done a little bit, but I don't really use any of them. I just leave them on here just to kind of like glance at every now and then. But essentially, this sessions tool is telling me, okay, this is a London session. I'm on the 15-minute chart. So this is the London session in time. And then what I've been able to do is back test through all these pairs and find exact times, which you can see are marked by these green lines right here. This is an hour chunk of time where the markup or where the move is most primed to happen for these pairs. So this Euro NZD one I didn't do too in depth on, but let me move over to Chef JPY, because I was just backtesting these today, and you guys can see it real well with Chef JPY. So guys, if you can see as I zoom out here, you can see these different trades. You know, these are all different days. So this would have been, you take this trade one day, and I'm an intraday trader, and this is exactly why. So one trade this day, another trade this day. Oh, another day, another trade, another day, another trade, another day, another trade. So that's how I'm trying to do. I'm trying to place at least one trade per session for these pairs. But then if you zoom in, this is Chef JPY, and now this is right at the New York Open. So it's 7 p.m. my time. If you guys are out in Miami, East Coast time is going to be 8 a.m. 8 a.m. Sorry, not p.m. a.m. your time. 8 a.m. your time when the New York session opens. That's when this move happens. My chunk of time here is 6:30 to 7:30. Now look what happens from 6:30 to 7:30. So first of all, the 7 o'clock candle. So if you guys don't know, look straight down to the bottom where those dashed lines go, and you can see where it's the 7:00. So that's, again, I'm 1 hour behind you guys, but that shows you that this is a 7 o'clock candle. This is a 7:15 candle. And look what happened in this hour. Broke above, retested, and gave me a perfect entry right here for the buy, which was the overall move for that day. Now you come over here and let's go to the same exact time. I don't care about what the market's doing. I'm going to the same exact time. It's right below here. And what happened? Broke below and retested and gave me an entry. Same exact time of day. The same exact time of day. And that's the important part that I want you guys to see, is that the time of day, again, same thing here. The time of day here, it went stagnant, made a fake push below, pushed back above, and then held solid, and confirmed for the buy off these levels there. So boom, again, perfect time to get in. Look over here, what do we have? Same thing, pull back, get in. And then you can come all the way over here to last night's trade, which I actually didn't take this trade because I got a little sketched out with what kind of happened through here. But you could see the pullback was right here for the perfect entry. But I was in more trades. I was already in my max number of trades, so I wasn't able to get in this one. But this was a perfect entry for a 30 pip drop right there. So guys, essentially, this is something that I've been working on that's really, really mind-blowing, and I still haven't perfected yet. You know, I did a lot of this back testing today and just learned more, and I'm learning every single day with it. But this is something that you guys can really go do and break down, and it can really, take your Forex trading next level. Because one thing that I always teach, and you can see over here, I have 4 currency pairs. I'm a full-time Forex trader, and IML TV educator, all that good stuff. Right here, 4 pairs. That's all I'm trading. So as a new trader, as a rookie trader, even somebody who's not even a full-time trader yet, you should not even hesitate to look at, only 2 pairs. only 3 pairs. We suggest on our live rooms to be looking at 3 pairs, but you should at least be looking at 2, 3 pairs. Don't go anything over that. I look at 4, and again, guys, I do this full time. So that's really all you need to know. And then, like I said, this is something that's very key. I'll put it in I'll grab it. Let me grab it real quick, just because I want you guys to have this, because I'm going to start IML TV, and I'll be honest, my life goes like 10 speed after that. So I want to make sure you guys actually get this this training video, because the video is very, very, very helpful, and it's going to teach you how to pick your pairs and how to find the exact setups for your pairs. So another thing that I'll talk about a little bit too, and you guys can see here's what I'm doing on this front too. So let's, this is the next session. This is when I trade Euro NZD right here, 230 to 330. So I have that zone marked, and this is where I'm going to find my entry zone. You can come over here to GBP CAD, and you can do the same exact thing. You can see right here, let it load. Boom, I'm looking for this to break, retest, and come into this zone. It might not do that. It might break above and be right here when it's time to enter. I don't care, but I just want to mark this and know this is where I'm getting in this pair. So that's something that I'm doing consistently, and then I'm teaching a lot of people to do as well, and they're having a lot of success with that. So that's something I want you guys to definitely keep in mind while you go through this training video that we're going to get here. Let's see. How to backtest right here. Yeah, 783 views, and it's not even been out for a week. People have been loving this video. So let me copy it.
What's going on, everybody? Chance got.
All right, let me throw this in the chat so you guys can have this, because this is something that I think everybody should definitely use, because it's going to make your life 10 times easier. Because as Forex traders, we don't want to be trading at the charts all day long. Like, I hate sitting at the charts. Doing this right here is not fun. It's not fun to sit here and wait and wait and wait. And what's the best part about Forex is it's a 24-hour-a-day, 5-day-a-week market, and you can custom fit the trading style to fit you and the lifestyle you want the best, because that's the most important part. You might not be a person who wants to stay up all night like me, but I am. I like staying up all night. I like that kind of, I was always up late anyway, so I might as well stay up all night and make money, trade London session. So that's something that I would definitely suggest, taking that YouTube video, go watch it, go implement it into your trading strategy, and it's going to help you out tremendously. Now, besides that, that's really the only thing that's kind of new and fresh that I'm working with, that we're not really going too in depth on yet on IML TV. Is there anything I want to ask you guys, because I want to bring the most value to you guys? If you guys have been on our live room, you know me and Sam do Q&A all the time, but is there anything in particular that you guys need help on, anything that you're struggling with, anything that, because I know some of you guys watch me on IML TV, I know some of you guys are brand new, so I know there's a wide little range of experience here, but is there anything that you guys like really want me to go in depth on, really want to know? If you guys could drop that in the chat or unmute yourself and ask the question, either way, just something that I could go into, because I could talk about support and resistance and trend lines and that kind of stuff, but if somebody needs help with psychology, we can go into that. I just really want to help you guys.
Entries, brother. We want to learn how to perfect the entries like Sharpshooter, man. We want to learn how to master the craft like Sharpshooter, bro. Where'd you get the name Sharpshooter? Teach us, man.
All right, got you. Pick a pair then. Somebody pick a pair. Throw it in the chat. I don't want it to be one of my 3, so I don't mess up my charts, because they're ready to rock. Does anyone have a pair that we could rock with? Anyone got a quick one? Let's see. GBP, JPY. All right, let's get it. So GJ is a wild, crazy one. So this will be a fun one to demo off of and show. So let's see. So guys, the first thing, the first stuff matters a little bit, but it's not going to matter exactly for the entries, besides once in a great while, but it's still important. So when we start marking up our charts, we're always going to go to the monthly level. Every single time, go to the monthly level, and you guys can see the major monthly level zones that are here. So I'm using support and resistance out here. One thing that I was talking about on a training, so when you guys are drawing your support and resistance lines, you see how all of these could be lines, right? There's all these different places to put this line. But what you have to do as a trader is you have to pick one end of the one of these that you are going to call the very, very end, and you're going to line up where it gets perfect touches. So I'm going to just choose this one wick that I want a perfect touch on this wick because it's got a little breakthrough here, a little breakthrough here, and when we look right, there's probably going to be more breakthrough and all that. Yeah, so it kind of breaks through in place here. So you have to choose one wick that you're going to grab, suck that thing all the way to the end of, and look, it lined up perfect with this wick, and it's actually really good with current price. So that's something that you want to keep in mind looking at that. But that's something that always like drag it to the very end of these wicks so you can see as price spreads out and as the market moves for you, you want to be as close to the end of the wick as possible because that's how you get the best entries. The closer to the end of the wick you can be on the 4 hour, the 1 hour, or even the monthly level, the better you're going to be because that's going to allow you to get the entry right at the end of those wicks when the next candlestick forms that rejects off of it. So on the daily level, you can see just broke above, nothing really happening here. But then I'm going to zoom in here on the 4 hour. So with the 4 hour, the next thing you want to look for is right here, support and resistance again right here, level right there. Whoops. And one thing as well, one tip as well, you can see I'm changing the colors of my lines. Pink is my monthly level, the 4 hour and daily are blue, and the 1 hour is green. You definitely want to color code your lines because as you get going in on your pairs, a lot's going to change on that. So that's always something to remember because every level is going to be a little different. So guys, okay, so right here, let's go. Let's act like we're gonna buy this pair right here. Okay, so it makes sense if I come to the hourly level. Let me see if I can get a trend line to go with us as well. If not, we got the support and resistance to cover it, but there might be a trend line right here. Let's try this. Bingo! Look at that beauty. Perfect. That's what it should look like. So throw a green line on here. Let's get. So now when I'm drawing these trend lines, what I'm looking for on a trend line in particular is I'm trying to catch them wicks, and as many as possible. So if there's going to be a couple lines that are more, so I'm going to drag it all the way back here, and I'm going to catch this wick right here. So this is going to be my back wick right here, my anchor spot, and then you're going to see how it comes up. Dang near touches here. Perfect touches all the way through. Perfect touch here. And then right here almost comes. So you're talking it missed by 5 or 6 pips. That's still a touch in my book. And something, if you guys are new to trend lines, another way to draw them, if you come over here and you click on, this is my rectangle now. If you click on this and you click on the rotated rectangle, you can draw your trend lines exactly the same, but put a little cushion on them because this is the real what a trend line looks like. It's like that. Because all these lines in the market, they're never going to be exactly perfect. You got to think they're going to have pretty much a 5 pip cushion to each side of every single line you draw. Now, I don't like to draw it like that because, the prices and everything can really get like messed up, or not messed up, but it's just blocky. Like I don't like my chart looking like that as much if I can keep it crisp with crisp, clean lines. But I mentally see this as a touch just because it's within 3 to 5 pips. So one thing that me and Sam are always talking about is X marks a spot. So that's when these lines, a trend line and a support and resistance, is coming real close together. So this is where we're going to get our entry at, right on this blue line. Now I want to walk you through exactly how I just got to mark that, so when I drop down to the 15-minute, I can find that entry again. Perfect. All right, there we go. So when you see this happening right here, so you want to watch this on the 15 minutes where I'm getting all my entries. 15 to 5-minute chart is where I'm looking for my entries at. So if I'm watching price fall, and I'm watching price fall, and I'm watching price fall, and I'm watching price fall, the first thing in my head is, when is this gonna stop? That's the one thing you want to think about is like, okay, when will this drop stop? Because you can see this drop here was 90 pips. So it's like, all right, is it going to stop? Will it ever stop? And the way you know it's going to stop is it's going to go stagnant. And that's when it's going to make a move. You can see right here, price went stagnant. Right here, price went stagnant and then made a move up. This could have gone stagnant and broke through and made a move to the ground. That's just, that's a chance you have to take when the market goes stagnant. Again, so you went down, 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 stagnant. The market went stagnant. That's when you need to get your entries. When the market goes stagnant, when it slows down here, this is saying, okay, what's going to happen? This is an entry point. Boom, it takes off to the sky. So we're waiting, 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 waiting. It goes stagnant. It goes stagnant. And this is where time is going to play a very important variable too. And this, I'm actually going to want to show you this on one of my pairs as well, so I can explain how the time is going to play a role as well, because you're going to know if this is your pair. Look at the times on the bottom, rotating, rotating, rotating. I have GBP CAD that I don't enter. And when Sam was looking at GJ, she wasn't entering GJ till 6 to 7 a.m. And if you look right here, let me show you guys. Let me grab this vertical line. Here's where 6 started, and here's 7. Oh, whoops. Let me get another line here. And here's 7, all right? So you saw that it was stagnant, stagnant, stagnant. So when I see, again, when the market goes stagnant, in my head, what it's telling me is the market's stagnant. Okay, I'm looking for an entry. The market is slowing down. Again, that could be a buy or a sell. And then that's where you're going to find levels over here. So what I'm going to do right away is I'm going to grab I have this blue line here, which is going to be marked as, the 4 hour level. And I'm going to grab this green line as well. If you guys have been on our sessions, we like to keep our lines at least 30 pips away. And this is like 6, right? So this is not a real level in my head. What this is called is a micro level. So I normally talk about micro levels for stop losses. I also look at them for reversal zones as well. So that's a micro level, or if you want to think of it as just a support and resistance level on the 15-minute. Here's another micro level. You see how it's got stagnant right here as a ceiling? Micro level. And then there's going to be one more that I'd probably see right here as another micro level. Touches, touches, touches. So when this price is coming down, 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 I want to enter right here as close as I could to this 7.6 level, because that's where I think on my 4 hour level, that's the best level. But then when I look at the micro levels, this is like, if you want to think of it as like a trampoline. If you guys have ever are micro levels only on the 15? No, you could see them on the 5-minute as well, but essentially they're just anything smaller than the hour level are just these micro levels, and it's more of the pips that they are away from your main level. So you can see that the farthest one of these micro levels is total of 18 pips away from this main perfect entry level that I want. But again, think of this as a trampoline. If this is you jumping on a trampoline, the trampoline needs to give a little bit before it can shoot you up, right? So this perfect board-like line right here is not going to just, boom, you hit a rock-solid floor and it shoots up. Even this right here, when it came down and hit, it still bounced on it, bounced on it, bounced on it, bounced on it, and it just kind of played on it a little bit. It didn't just boing, hit right up. So this is like a trampoline. Pulls it down, 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 shoots it back up, and then boom, this is my time to trade. So when you're sitting here waiting to trade, this blue upward candlestick just closed, and you're sitting right here at trading time. So if I'm sitting right here at trading time, 5 pips above where I want to enter, what I'm doing is I'm setting up my trade. So the first thing I'm going to look for is if I get in perfectly right at my price, where does my stop loss have to be? Now, if you guys know our trading style, we like to keep our stop losses. Honestly, our personal favorites are around the 13 pip range. 13 to 15 pip range is like a perfect. Sometimes we'll even go down to 7 pips. But essentially, what we're going to do is check this, because this is our stop loss, right? This is our stop loss. And we need it to be below at least 1, probably 2, in a perfect world, 3 of these micro levels. So as a brand new trader, having a stop loss of 20 pips is amazing. So if you had these 3 micro levels right here, you could throw a 20 pip stop loss, because I would suck this up to a 7. Now, this is another little hack or a little tip, especially with stop losses, that's very important to realize, is that in the Forex markets, people like us, the traders like us, we are like the small money in the market. The big money in the market is controlled by the banks, is controlled by, you know, the millions and billionaire hedge funds and all that kind of stuff that are playing in the markets. The truth about them is they're lazy. That's just it. At the end of the day, those people are lazy, and they put their stop losses on 0s and 5s. So instead of putting this on 147.57, they're going to put their stop loss right up here to 147.60 because, you know, that's just a nice round number, and that's where they're going to put their stop loss. Well, the market knows that. The market knows that, just like this. If we would have entered right here this first time, so let's say the first time down, boom, you instantly enter right here, and you put your stop loss at 65 because you look left, you're like, okay, that's a little bit, it's below this second micro level, and I want my stop loss at 65. Well, look what the market did. It came right down to actually what it come down to, 64.3. So just a smidge under 7 pipettes under 65, which would execute the stop loss on all those trades that put their stop loss on 65, then boom, reverse and go up. So that's why we're always putting our stop losses on, this would be 63. So the last column would be a 3. And all the way down here to 57, where the last column would be a 7. Because I do not ever end my stop loss in a 0 or a 5, because that is what the big money in the markets do, and that's where the market is going to go. If you've ever heard the term stop hunt, if you guys go look at stop hunts, majority of the time is they're pulling those 0s and 5s, stopping everybody out and reversing. A lot of times they'll save a lot of money by having my entry at the 7 or 3. It's helped us out a lot. So that's something to always keep in mind as well. So when the market comes down, it's coming down, boom, it hits. This candlestick right here tells me it does not like this level. But then this comes down and plays and plays and plays. And then this candlestick right here is the confirmation. This is when, like, if you guys hear us on the room, me and Sam will say, like, the market tells us it's going up. This is a candlestick. This right here is the candlestick that tells me this pair is going to go up right here. Stagnant, stagnant, stagnant. Big, strong buy candlestick above this level. But I did not say this is where we're going to enter, because once there's a push up, there's always going to be a retest down. So you're going to wait for that push up, retest it, boom, execute that trade. Now you're going to find that stop loss again by finding these minor levels and then putting your stop loss a smidge underneath them. I probably personally, if I was trading this pair, probably would have put down 63, would have put my stop loss right here. And you can see that the pair actually did go for a nice long buy position here. Ended up going for like 90 some pips. So that's a really good trade. But I want to show you guys on one of my pairs now, and I'll show you guys why do those candlesticks tell you that. Okay, so the candlesticks tell me that because, let me zoom back over here. When I'm looking at the market right now, so let's say I don't know what's going to happen to the right. I don't know what anything's going to go down to the right. I just had this blue level, because I'm like, okay, this is that floor that I would love to buy this pair off of. So if you were on the session with me and Sam, if we were waiting for this pair, so if we were waiting, this is how it would look on my let me get rid of all this, on my screen. So if I was waiting, I would say, okay, I want price from here to come down and bounce off, or I want it to just break below, retest, and we'll go for the sell. Okay, so that's what I'm waiting for. I'm waiting for one of these two things, because here's something we do as well that is very important, is we mark up our charts 5 to 7 to even 12 hours before we trade. So we're going to mark up our charts when the price is sitting right here and I predict it's going to go down, bounce off, and go up, or go down, break, retest. And then you come back to the charts 7 hours later, and you see this is happening. Now, you guys might say, oh, that's the break. And that could have been the break. But the key is it wasn't my trading time, first of all. So this is why your trading time will save you. If you know the best hour to get in the trade, you're not going to fall for this fake out candlestick making you think it's going to sell. And then also you need to realize that it's only pushed down from your level. 14 pips is the max it's gone down. I don't consider anything a break. I mean, maybe this 14 pips I would, but you got to realize this 14 pips is on a wick, and this wick is a doji. So really the breakout candlestick for the sell right here is a 9-pip candlestick where only 7 pips is breaking below my level on the 15-minute, to me, that could be a fake out. That doesn't mean it's going for a sell. But when price struggles on my level. So this is an analogy I use too when I'm thinking about price trying to break through levels. It's like it's knocking at the door. So it's got two things that are going to happen if it keeps knocking at the door. It's either going to open up and then it's going to go through the door and it's going to go for that sell. Or it's going to keep knocking, get tired and go away. And this is what happens right here. Knocking, nope, knocking, nope, knocking, nope. And it knocked 3 times, it got denied. So after the first knock and it pushes back up, I'm like, okay, I didn't like that level. And again, this level, remember, this is like a 5-pip level. And if I see right here, look what this is. This is a nice round number as 0. So I might have, I probably would have put a level right here as well, where the 0 is, just to see that, okay, it comes down to this reject. So this is 1 knock. Nope, goes up. And then another knock, and this knock is going, again, below my blue line. Another knock. And then this candlestick says nope and breaks above and closes way up here. And then I get this pullback. And then it goes to that last little knock, and it turns it down. So that's what I'm saying is it got denied once. So this candlestick doesn't say buy because this is only 1 runaway. By the second runaway, if this candlestick goes up and closes above your level, because if you really wanted to, this level could have been moved to up to here. If you wanted to, even if you wanted to call this the new ceiling, because you got a wick here, a wick here, a wick here, and a wick here, it broke above and closed even above that, which signifies, okay, the market wants to go up, and then it pulls back, and then it makes that one last ride. So that's what I'm saying there. How do you minimize risk and maximize the reward? So that's what you're doing with the small stop loss, to minimize the risk and maximize the reward. So you always should be doing the math on your stop loss to know what kind of stop loss you should be using. But let's say we just got in right here on this level, and we stuck to stop loss up. I said 63 is where I would have put it, so a 13 pip stop loss. Now look at how high this goes. So now we're up 90 pips is the max. Our risk to reward now is, 6.7. So 6.7 risk to reward. That means if you risk 2% on this trade, and you are going to scale out and you're going to take out some money along the way, so you're not going to catch the total percentage. But if you held your trade the entire way, you would have made, you risked 2%, you would have made roughly 13 to 14% on this trade. So that's a really good risk to reward, because you can lose 2%. You can lose 2%. And then as long as you catch one trade that goes for 7, 10, 12%, you can make it up real quick. And that's the beauty of this strategy is, yes, we're using small stop losses that sometimes it'll get hit. But once this, once you get a couple trades to go big, it's going to make up for your losses in a tremendous way. What was the profit stop loss tool you're using? This tool is right over here. So it's the slider. You can see we have long position and short position right here. So you can choose whatever position you want to do and rock with it. So let me head back over to Chef JPY. I'm going to show you guys one more time on this, and I'll show you as well like how I back test these pairs, so I can show you kind of like in a past trade what happened with this thing. So I always watch these, and I'm always back testing. I mark everything up all the way to the hour, but then I'm watching for these entries, and I'm watching for my back testing on the 15-minute, because that's where it's most likely going to show me where the where the prime entries are going to happen, is on the 15-minute chart. So again, my trading time for Chef JPY, so this is something you'll do after you watch that video. My trading time for Chef JPY is 6:30, which is right here, to 7:30, which is right here. All right, 6:30, 7:30. So now when I'm watching this pair, so first of all, let's back up here. So I got that all marked. I can get rid of that, do this, and I'm going to get rid of this just because I don't know what that was from. And okay, so price, this is looking like I don't know what's going to happen. I don't know what's at my level. And I just want to mark up some support and resistance real quick for you guys. So there's the top ceiling that I'm seeing. Here is a floor that I'm seeing right here. So you can see how channel, boom, boom, came up. And then there's a trend line coming up through here as well. And this is something you guys can do every single day is you can come back here and back test, back test, back test, back test, back test. So this was going to throw, yeah, there we go. Let's see if I can back this up a little bit. Make sure my trend line's good. Perfect. I can probably suck it in a smidge. I'm going to use this as my anchor spot, another touch. And you see how I just cleaned up the touches a little bit? Now I can drag this down a little bit more and line it up with these touches right here. 1 touch, 2 touch, that's what I'm looking for. So now when price is coming down, what I want to do is I see this, I see this, I see this, and I see this break down to my trend line. Now, this is what's very, very important because a lot of people, and me included, you might be saying, break, I'm waiting for a retest. I'm waiting for a retest. I'm waiting for the retest. You might have got it in the sell here, and this is something that might have happened to you, and you could have caught, 15 or so pips. You might have broke, retest, sell. But because I know that I should not be entering this trade until this key time, which 7 o'clock on the dot for me is the best time to enter this trade. So I know this is a candlestick I would love to get in on, which look, it came down and touched my trend line perfectly. So what I want to see here then is when I see price coming down, and breaks this level and pulls back up, do you see how nothing is clean? Do you see how nothing is clean here? This retouch is all the way up here. This retouch doesn't, it kind of makes sense for this a little bit, doesn't really make sense there. But what if you drag this the other way and said, okay, maybe I need to go to the low side. And if you went to the low side in the bottom of this wick and then continue to look left, look, you would see, oh, it's got a wick here. Oh, it's got a wick here. Okay, so that's the solid floor. Now, here's what we're looking for. Market opens right here. For you. And again, this is something that me and Sam always talk about is our market opens. Thank you very much. Our market opens isn't when the market opens. It's when our trading time opens. And for us, that's 6:30 for this pair. Chef JPY, 6:30. Boom, the market opens. So if I'm looking at only to the left, so nothing like this candlestick hasn't printed yet, and I'm looking just left of this, what's this look like to you guys? This looks like a rejection to me off my trend line, which says this market should go up. And this looks like those 2 candlesticks that I was talking about that says, I'm going for the buy, I'm going for the buy. And then, 7 o'clock hits, pull back. But that's the one thing that you don't need to run from. A lot of people run from the pullback because they get scared. And I still get scared sometimes, guys. It's something that's going to happen is the emotions of these trades are going to kick in. And you might be saying, okay, like what's good with this? Why is this pulling back? Why is this pulling back? But that's when patience kicks in because you need to realize that this could come knock again. Look, knock, turned away. Knock, turned away. It could still try to knock one more time. So when I'm seeing this stuff form, this candlestick right here is the perfect entry candlestick for me. This candlestick right here. Because this candlestick is holding this floor and rejected my trend line in one candlestick. So I would have entered as close as I could to this touch on the next candlestick touch down. So this push down, I probably would have got in right here. Right at about 83-ish. 83 would have been my entry spot right here when this pushed down. Now it is because this is going to be the next touch down to this level right here where it hit my trend line, and I think it's going to reject and keep going up because this candlestick told me that it didn't want to break this floor. Now, I didn't know, but this was coming. The next candlestick really made a strong push down, but you would have been safe because here's why. When you're looking for these stop losses, when you're looking for your stop loss, there's 2 things that are very important. Oh, my goodness, guys. Is this really true? Is this really happening right here? Look at this number. So if you guys can't see, let me put it in yellow so you can see what this actual number is. So if you guys look to the right, you see this yellow number right here? This is going to be where the support and resistance line go. What did it turn around on? 75. 75. 75. Guys, if you would have put your stop loss at 75, like 95% of people would have done right here that don't know this rule, Actually, everybody would have put their stop loss right there at 75 because round number, boom, put it at 75, you'll be fine. All you had to do was know that you should put it at 73. All you need to do is know to put that at 73, and this stop loss gets missed. Perfectly goes up off of it. So there's something, again, these numbers are important. 75 is no-go. Another reason you should have put your stop loss below that level is because it did already reject exactly off that price once. So more than likely it could do it again. So I would have put my stop loss right there at 73, would have been the level I put it at, because if price broke below this level, it's going to go down. It broke my uptrend. It broke everything, but it didn't. And then you guys can see right here, because I entered at my time, in my time frame, because if you entered right when this market opened right up here, you know, that would have been a big stop loss. You know, not really. It would have been a 18 pip stop loss, which still isn't huge for most people. But if you were patient, waited for that pullback right to there, boom, you execute your trade and you put your stop loss in the right spot, because again, 73 right there, right underneath that wick perfectly, and you just caught a nice 34 pip trade. Now, FJPY is not a crazy wild mover. Occasionally I'll catch a 100 pip trade on it, but it's a steady 30 pip trade. And look at this, 3-to-1 risk to reward is the important part. Your risk to reward in the 3 zone is a really good place to have your risk to reward. So if you can get in with a 10 pip stop loss, go catch 30, 40 pips on that pair. That's a really good trade. So that's how I'm finding all my trade setups, exactly like that. Time is the most important. After time, look for that support and resistance. If your line doesn't make sense, this is something that happens to me all the time too. If you have your line drawn right here, because this makes sense, perfectly good line. But if you look right and it doesn't line up perfect with what happened here, it wasn't a clean break, retest up to this level, you should be looking for something different, because this line is not what's respected. The break retest is not the move. Because this wasn't clean, it was ugly, it closed above, it closed there, that makes me want to pull this down a little bit and start looking left to find out what I can find. I can see this now, I can see this now, because if you just look at this, this makes sense right here, doesn't make sense right here. This makes sense right here, doesn't make sense here, but makes sense here. More touches means more accuracy. Boom, trade went off perfectly. So that's just a little breakdown of how important time can implement your trade, so you know what time to get in. And again, guys, this is something too that you might have gotten right here, or you could have got this entry right here at 4 o'clock. You know, 4 a.m., you could have entered right here. Let me see, boom. Your stop loss would have had to be, you could have kept the same stop loss, a 12 pip stop loss, and you could have caught 30 pips. So really the same trade, but you had to sit in it for 4.5 hours. I don't know about you guys, but I want to show up to the market when it's prime, when it's ready to go, which is right here at this time, which I can find from that backtesting video I put in the chat. And then I want to get in at the perfect time and just take that ride, because I hate sitting in a trade that goes stagnant like that. I want to catch the move that's going to go make me that money. So that's really it, I think, from my side of like showing the entries. I showed how to find stop losses. Guys, take profits are pretty much the same. One thing we do, our first take profit is risk to reward 2-to-1 every time. Every time 2-to-1. So I'm using this risk to reward tool right here. I want this to be at a 2. So boom, 2 is right here. So I'm going to put my take profit 1 at 112.03. So guys, 112.03 is where I put a TP1. That means when price gets here, I close half my trade, which would have been great if this pair, because you see how it kind of rejected. If this pair decided to reject and go down like this, you would be very happy to have half your trade close and another half just hit a stop profit instead of your whole thing hit stop profit. In this case, you would have closed half. It would have kept going up, 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 up. And then once you saw price go stagnant like this, you would have closed the entire trade. When the market goes sideways in a dead right sideways movement, then that is when you just need to pull the plug, get out of the trade, and say, I'm done, I'm done, I'm done. So those are a few things, guys. I got like 14 minutes till we go live, probably 10 minutes till I have to hop off here. Is there anything else that you guys would like to know? Any questions you have? Anything you'd like me to go over from what I've gone through so far? All right. Nobody's got anything? All right. So if nobody's got anything, then I'm pretty good over here. I want to just say thank you guys for hopping on. And then also about our IML TV channel. This is something that you could definitely, like, if you guys aren't plugging in every single night, I think you're doing yourself a disservice, honestly, just because I hear the success of people every single day. I have, like, my phone gets hit up with people from our session every single day that's learning. So if you guys are still in that struggling part where you're still trying to figure out exactly what I went through today, if it sounded a little over your head, if some of that didn't make sense, even some of the tips and tricks like the 3 and the 7, or there's a lot of other tips and tricks I probably forgot about that we talk about on a nightly basis. 5 nights a week, we go live. We have a Forex 101 call. We're on that Forex 101 call. It's Forex 101, but it's not really Forex 101. I don't know if you guys have been on our session, but we teach a lot more advanced basic stuff, and we teach you how to implement everything. We don't just talk about what a pip is, what lot size is. We teach you how to calculate your risk so you keep your money safe. We teach you how to pick your 3 pairs. We talk about back testing. We talk about all that stuff in our Forex 101 call, the first 30 minutes. And the second 30 minutes is wide open Q&A. So you guys could get on every single night and just listen to all the questions other people have and get answers to all kinds of different Forex questions, and then ask your own as well. Then we do our Sharpshooter 101 call that starts in 2 hours, an hour after the immediately following, right after we go right into the Sharpshooter 101 call. And there we're trading live now. That's something that me and Sam have done. We picked Asian session pairs that we are trading live. So you guys can see exactly how we trade live, see exactly how we look for the setups, and see exactly what's going on in the live market. We talk a lot of psychology on that call as well, because if you guys are just getting to the point where these lines are still struggling, you're still haven't figured out the lines, awesome. We can help you with that. But once you get past understanding how to mark down lines, that's when your brain comes in. That's when the 90% of this really comes in, because I don't know if you guys have heard this yet. This whole game of Forex is only 10% technical, what you can draw up on the charts, and is actually 90% mental, the 6 inches between your ears. And what we talk about on the Sharpshooter 101 call is a lot of the psychology of trading that allows people to keep pushing forward, keep staying consistent, and keep working on this skill. Forex is not something that's going to get you rich overnight. It's not some get rich quick scheme. Hopefully you guys have figured that out by now. But it is something where if you are consistent, if you put in a lot of time and hard work towards this, it can really create the dream lifestyle for you guys. And I just want to end with saying, like, one thing I like to talk about a little bit is what the end of this journey looks like. Because a lot of you guys here are putting in a ton of hours and a ton of time to learn Forex, which is amazing, because it means you're dedicated to your dreams and you're dedicated to what you want out of life. But the beautiful part about Forex is once you really master this skill, once you really master how to trade, you can really set yourself up to do something 2 to 3 to maybe 4 hours out of the day that can create more money than you've ever dreamed of. And then you have 20 hours of your day to go live and do what you want when you want. That's the real blessing with Forex, is once you figure out how to make money in this market, you don't want to sit down and trade 24 hours a day. You want to sit down and trade 1, 2, 3 hours a day and then go live your life. And that's the beautiful part about this. So put in the hard work up front, figure out how these setups work, get on the IML TV sessions, learn. And trust me, once you get to the back end, once you guys are at that point where you're making the money of your dreams at Forex, you literally have a life by design. And you can create that life over and over and over again on a daily basis for yourself. So I want you guys just to realize this is a long-term game. It took me 2.5 years to get to this point. I was, laughed at, told I was stupid, everything around, everything imaginable on this journey. I was told Forex wasn't going to work. And now we're moving down to Miami just to prove that it works. In reality, guys, my entire life has changed because of Forex. And it was because I put in 3, 4, 5 hours a day. There was a time where I was putting in 8 hours a day into learning this, into back testing, into learning this skill. And it's crazy that it all pays off in the long run. So put in all the time up front, and trust me, the back end time is really nothing at all. I sit around, I watch Netflix, I watch YouTube videos, I hang out with Sam, and we make money every single night. That's the life we created for ourselves. During the day, we get to live the life of our dreams. That's it. So, guys, just keep that in mind as you go through this journey, because the end's nothing like I could have imagined. All the hard work I did on the front end, I assumed that, you know, I had to keep working hard, and I do. But once you get the skill set down, it's really just, you know, it's about hitting that stride and doing the same thing every single night, and really getting to your end goal. So, guys, with that being said, I'm going to hop off so we can go run IML TV. Thank you so much for your time. If you guys are free, hop on over to IML TV. We start our Forex 101 call, and definitely check out the Sharpshooter 101 call going live in about an hour, because, you know, that's where it goes down. We'll show you everything. Everything you saw here, you'll get to see it live. So, that being said, I'll see each and every single one of you guys later.
Blessings, brother. Thank you so much for helping us out here. Guys, thank you for hopping on tonight. You heard it here from Sharpshooter. The session will be recorded. I'll have it live on the YouTube channel. But guys, study hard. You heard it from the legend, and you heard it from someone that's moving right down to Miami to teach us. But everyone have a fantastic evening, and thank you for hopping on the call. Much love.